The world has always treated the Vatican as a spiritual authority, a moral center, a symbol of continuity older than most modern states. But behind its religious identity exists a sovereign financial system, a system that does not operate under Italian banking law, not under European Union supervision, not under the regulatory architecture that governs nearly every other financial institution handling international capital. Inside the walls of the smallest country on earth, money moves through structures built on sovereignty, tradition, and historically, secrecy. And in the last decade, one transaction forced that system into the harshest public scrutiny it had faced in generations. An investment, hundreds of millions of euros, a luxury building in London, and a financial chain reaction that ended with criminal convictions inside the Vatican itself. But to understand why this case matters, and why it shook institutional credibility far beyond religious finance, we need to begin with something most people never examine closely: how the Vatican actually manages money. Because the scandal did not begin in London. It began inside a structure designed to operate differently from every other financial power on earth. The Holy See is not simply a religious organization. It is a sovereign entity recognized under international law. It signs treaties, maintains diplomatic relations with more than 180 countries, controls assets across multiple jurisdictions, and manages financial flows originating from donations, property holdings, investments, and institutional reserves accumulated over centuries. At the center of public perception stands the Institute for the Works of Religion, the IOR, often called the Vatican Bank. It does not lend to the general public. It does not operate retail branches. It has no shareholders demanding quarterly returns. Its stated mission is administrative, managing funds belonging to Catholic institutions, religious orders, and employees of the Holy See. According to official Vatican financial reports, the IOR manages several billion euros in client assets. Its balance sheet is modest compared to global banks, but its power does not come from the size of its vaults. It comes from its unique legal status. Because the IOR is located within Vatican City, it operates outside the jurisdiction of any national central bank or financial regulator. For decades, this created a unique environment, a place where transactions could occur with a level of secrecy that was virtually impossible in London, New York, or Frankfurt. But the world changed. After the 2008 financial crisis, the era of bank secrecy began to collapse under international pressure. The Vatican was forced to adapt, first under Pope Benedict XVI, and more aggressively under Pope Francisco. New laws were passed, financial oversight was strengthened, and for the first time, the IOR began publishing annual reports audited by international firms. But these reforms created a paradox. While the bank became more transparent, other parts of the Vatican's financial architecture remained opaque. And one of those parts was the Secretariat of State, the Vatican's most powerful administrative department. Unlike the IOR, the Secretariat of State did not have a tradition of external financial oversight. It managed its own funds. It made its own investment decisions. And it was here, within the Secretariat of State, that the London deal was born. The deal involved a luxury property in Chelsea, London, a former Harrods warehouse at 60 Sloane Avenue. The deal involved a luxury property in Chelsea, London. A for me on paper, it looked like a standard real estate investment. A plan to convert the warehouse into high-end luxury apartments. But behind the scenes, the structure of the deal was anything but standard. The transaction involved a complex web of offshore funds, high-interest loans, and various intermediaries. The Vatican didn't just buy the building. It bought a share in a fund managed by an Italian financier. As the years passed, the costs associated with the deal began to spiral. The Secretariat found itself paying millions in fees and interest. Eventually, the Vatican decided it needed to exit the investment and take full control of the building. But to do so, it had to pay even more. To fund this final buyout, the Secretariat of State turned to the IOR for a loan of 150 million euros. This was the moment everything changed. Under the new transparency rules, the IOR's leadership flagged the request as suspicious. They alerted Vatican prosecutors, who launched a raid on the Secretariat of State's offices. It was an unprecedented move. Computers were seized, documents were taken, and the investigation eventually led to the largest criminal trial in the Vatican's modern history. At the center of the trial was Cardinal Angelo Becciu, once the second most powerful official at the Secretariat. In December 2023, Becciu was convicted of embezzlement and sentenced to 5 years and 6 months in prison, making him the highest-ranking church official ever tried by a Vatican criminal court. The London deal was a disaster that cost the Vatican over 100 million euros in losses. But it also became a catalyst for change. Today, the IOR is more transparent and more strictly regulated than ever before. The verdict was only the beginning. To prevent another disaster, Pope Francis took a step that shook the Vatican to its core. He stripped the Secretariat of State of its financial independence, moving all its funds under central control. For the first time, the Bank of the Pope would have no shadows to hide in. But transparency requires more than just centralization. It requires a watchdog. Every single euro spent by the Vatican now has to pass through the Secretariat for the economy, a new financial sheriff with the power to veto any deal that doesn't meet the strictest ethical standards. But the scars of the past remain. Millions were lost forever, serving as a permanent reminder of the high price of silence. The era of looking the other way is over. New laws now shield whistleblowers, turning every official into a potential guardian of the truth. The Vatican is no longer a financial island. Today, it shares data with global watchdogs to ensure that no transaction remains hidden from the world. The results are concrete. For the first time in years, the profits are flowing where they belong, not into luxury real estate, but directly to the missions and the poor. The most painful discovery was the source of the funds. This wasn't just institutional wealth, it was the Peter's pence, money donated by the faithful to help the poor. To keep the scheme alive, the Secretariat operated in the shadows, maintaining hundreds of secret, off-balance sheet accounts that were invisible to official auditors. The funds took a detour. Through Swiss banks and complex shell companies, the money was layered until its holy origin became a ghost. Brokers were given total discretion. Soon, the church's money was fueling industries it publicly condemned, from fossil fuels to heavy weaponry. The brokers didn't just take the money, they sold the Vatican's name. The Pope's seal became a trophy, used to lure other investors into a web of high-risk gambles. It was a rigged game. While the church's investments crumbled, the brokers pocketed tens of millions in management fees, getting rich off the Vatican's losses. To hide the growing void, they doubled down. They took out new loans to pay old interest, creating a spiral of deception that pushed the Vatican to the brink of bankruptcy. The alarms were ringing. Internal auditors raised the red flags, but their reports were buried, and their careers were systematically dismantled to protect the lie. Inside the walls, a wall of silence was built. Questioning the finances became a dangerous career move, as secret dossiers were used to keep dissenters in line. The silence finally shattered from within. The Vatican's own bank refused to fund the cover-up, choosing instead to blow the whistle on its own superiors. October 2019. In a move that shocked the world, Vatican police stormed the Secretariat of State, seizing computers and files from officials who thought they were untouchable. Panic spread like a virus. Behind closed doors, officials scrambled to delete encrypted messages and shred digital trails, desperate to vanish before the headlines named them. The secret was out. A leaked document naming 5 high-ranking officials hit the front pages, turning a private investigation into a global scandal the Pope could no longer ignore. The hammer fell. In a tense private meeting, Pope Francis stripped Cardinal Becciu of his rights and authority, demanding his immediate resignation from the elite circle of power. The counterattack was swift. In a surreal press conference, Becciu broke the silence of centuries, claiming the Pope had been misled by hidden enemies within the walls. The plot took a cinematic turn with the Lady of the Cardinal. €500,000 were sent to a mysterious company in Slovenia, allegedly for secret intelligence missions that never existed. The trail was obscene. Funds meant to ransom kidnapped nuns in Africa were diverted to luxury boutiques, paying for designer handbags, shoes, and high-end accessories. In a final act of desperation, Becciu secretly recorded a private phone call with Pope Francis, attempting to trap the pontiff into admitting he authorized the secret payments. The secret recording was a bomb that backfired. The Vatican court ruled it inadmissible, viewing the act itself as a profound breach of loyalty and a violation of the very laws Becciu claimed to defend. The verdict echoed through history. For the first time, a prince of the church was sentenced as a common criminal. 5 years and 6 months in prison for embezzlement. The shockwaves reached every tax haven. This wasn't just a trial in Rome. It was a clear signal to every religious fund on earth. The era of secret, unaccountable finance is dead. The Pope's response was surgical. He stripped the Secretariat of its financial crown, moving every euro to a central authority under strict, independent oversight. The Old Boys Club was dismantled. For the first time, lay experts and secular economists took the helm, replacing clerical loyalty with professional transparency. The fortress of secrecy was breached by accountants. For the first time, global auditing firms were invited to peel back the layers of a 1,000-year-old financial mystery. The shadows vanished in the glow of a screen. Today, the Pope can monitor every global transaction in real time, ensuring that not a single cent goes missing again. Transparency had a steep price. To break the cycle of corruption, the Vatican sold the London property at a staggering loss, trading millions in cash for its moral integrity. The money was reclaimed for its sacred purpose. Every cent from the London sale was strictly earmarked for humanitarian aid, funding medical centers in the world's most forgotten war zones. The scars of London remain, but the precedent is set. Pope Francis turned a house of secrets into a glass house, proving that even the most sacred titles cannot shield the corrupt from the light. Power demands shadows, but justice demands light. The Vatican's journey from scandal to transparency is a reminder that in the face of truth, no secret is forever. Watch your coins, for even the holiest ground is tested by gold.